watermelon flavor. All right. So, folks, the first thing I want to do is go through what's on your page here. And this is the news that's come out today, economic news, and it's worth looking at because there's a lot of news being dribbled out here and there piecemeal as it becomes available. Certain things are not yet available, like the COT reports, for example, on the futures, but there is some stuff coming out. Now, let's have a look. And I don't even know what sort of is released every day at the moment, but let's have a look. Unemployment, the ADP unemployment change. It's Wednesday today, so tomorrow we get jobless claims, and then Friday we get NFP, if we get it. I'm sure we will. Let's scroll down, because it is the first Friday of the month, and that's when the NFP, non-farm payrolls jobs, come out.
Yeah.
And I guess we'll get it this time.
Hopefully.
Maybe not.
Make a nice change.
I don't think we're going to get it, you know. And I know there's a backlog catching up on. Let's have a look. We've got the Canadian unemployment numbers coming out on Thursday. We've got PCA Friday. We've got PCA on Friday, core PCE, Michigan, all the inflation stuff, Baker Hughes rig count, but no non-farm payrolls. So all we've got to go on at the moment is the private numbers that are coming out. And let's have a look at what the number came out on today on the ADP jobs report. And if I can find it now, let's scroll all the way back here. And you can see, expect a previous number for unemployment change, positive 47,000. Expected for this reading was 10,000, but we got negative 32. So at first glance, not too good for jobs, right? And we don't know what the non-farm payrolls are, but we do know that there is pressure on jobs at the moment and that the Fed's looking at it. Now, I guess they've probably got an inkling of what those numbers are. And there are signs and emergency meetings, for example, coming out of the Fed like yesterday, where we now know that quantitative tightening is now over. The first sign of the Fed sort of backtracking. Now, we got, of course, the interest rate decisions coming up this month as well. And I think this is leaning towards an interest rate cut because of job pressure. So what do you think of that, Paul? I think that's pretty good news, even though it's not good for those 32,000 people who lost their jobs.
No, it's not. And obviously, I didn't realize that we hadn't cleared the backlog yet from the government shutdown of the data, which obviously doesn't help things. And it does. It is going to make this month a little bit frantic and unpredictable potentially. But we've got a lot of people stacking up, saying that, what comes out of the White House and what is coming out of some of the governors and everything, it's quite consistent in terms of interest rate cuts this month. And it's that double-edged sword again, isn't it? It's like, which way is it going to cut? But I think an interest rate cut would make sense. It seems to be that's the way it's going. I'm not going to place money on it, but I mean, that's your consensus too, right? Even though we're missing some data points. Yeah,
I think as soon as you see now the private jobs numbers that we're seeing on the page here, the ADP numbers, and there's another, the JOLTS job report, which may come out tomorrow, actually. We'll have a look. I'm not going to scroll through all of this now, but I think when we start seeing pressure on jobs, that's very, very concerning to the Fed. And of course, we don't know, although they might know what the jobs look like. We don't have sight of that. So I guess we're going to have to guess. What else came out today? Apart from that, not a lot. Capacity in manufacturing and so on. But in 27 minutes time, we've got the ISM numbers, which are also important. And we'll get to hear about the services side of the industry, and expected quite peppy and quite firm still. And then we got the gasoline and crude oil changes later, which will affect our oil trades. And that's really all the news that we've got until tomorrow, when we get more jobs numbers, some data coming out of the UK and Japan. And of course, all eyes on Japan. And if Japan decides to raise interest rates, as they've sort of insinuated that they might, even though we've got a very ostensibly dovish new prime minister. Maybe she's not as dovish as everyone thought, and that's exactly what I expected. And we're now hearing inklings that we may get an interest rate increase in Japan, which will put enormous pressure on the US equities markets, and including potentially Bitcoin too, as we see capital flowing back into the yen, out of the US markets in general and in crypto.
Long-winded, boring article about the Japanese perspective on that early in the week. I mean, look, again, like with the job numbers, we have to right now. I mean, if you're looking for real insights, it's not a monolith, and that's the most important thing, right? For the job numbers, and because obviously, you can have certain areas of the job numbers propping up, doing really well, but like the service industry as an example, which was struggling during the pandemic, and you could say the opposite now, and it can prop up the numbers. But also the whole interest rate thing, the whole inflation thing, right? If you try and look at the federal government in the United States as the de facto way of dealing with it, it's just not. It's so old hat. And as an example, like inflation is a multifaceted thing, and it comes from corporate profits as well. But the Fed's way of dealing with it is quite monolithic, right, in terms of the way it approaches it. So it's all swings and roundabouts. And when you take up and you look at Japan maybe diverging from the trend, right, well, then maybe that's quite an insightful thing, regardless of the pressure it creates in terms of how to deal with these issues. But yeah, it's going to be quite interesting for sure, and we'll have to wait and see.
Yeah, no, for sure. Good day, Lucky. I'm glad you became a member eventually. Crypto Paul has left us, fallen off the stream. Maybe he lost connections. I'm going to go onto my charts and straight away and see if I can add that to the stage and stop the screen. All right, let's add something. Give me a second here, everyone. That's gone weird. Here we go. I think we can get it. 1 second. All right, charts. Here we go. So Lucky, and all those in the chat, I'm glad you're bearing with me. We've got the charts up. So let's run through a few things. Now, the markets have just opened 4 minutes ago, and Paul will be back, I'm sure. He's just dropped out because of internet connection issues, I think. But let's have a look. The markets are now open, and you can see the very first thing, NASDAQ's ticking down. We've been open for 5 minutes now. This is the first 5-minute candle. Let's have a quick look. Go to the 5-minute chart. There it is, opening. Actually, this is before the open, right? This is a couple of hours, half an hour before the open. Here's the opening candle, just a bit of a tick down and bouncing back up again. So no big sort of massive move over here on the NASDAQ. Now, ticking down, bouncing up a little bit. My overall idea for the NASDAQ remains bullish, and I'm still fully long. And my projection, if you go with the long side as I do, let's try and shrink this down, reset the scale. My projection for this move is just to really continue within this big red channel, just underneath the channel top line. We reached my first target, and I think we could wiggle around in there. We'll have to see how we go. And we really do want this week, and considering the jobs numbers, and perhaps that'll give us a little bit of impetus for the markets, considering that might put pressure on Jerome Powell and the Fed to cut rates. So still long on the NASDAQ and holding fairly well after a good day, 2 good days actually this week, Monday and Tuesday, both making higher highs and higher lows. And today so far, a higher low. So no reason to panic about that. Same thing on the S&P. And I'm long. Oh, you're back, Paul. Hello.
Sorry, yes. I was only 30 seconds. I apologize.
I didn't even notice. Yeah.
The postman seems to come every time we do a live stream. It's absolutely insanity inducing, right? It's just like 1 hour in 24. So the whole thing about the whole, oh my God, I'll be right back. Sorry, carry on.
All right, I'll carry on while you get your post. Postman. I always get Amazon deliveries at this time of the day as well. So yeah, long and strong on the NASDAQ, S&P, German 30, and Google. Now, there are some interesting names here at the bottom. I'm long on all of these: MSTR, Tesla, Coinbase, Nvidia. 2 sort of crypto plays, and 2 you might call AI plays, Tesla and Nvidia. Now, I don't have any other names on at the moment apart from these indices at the top here, but I kind of like all of these. I want to have a look at MSTR. This is a particularly interesting chart. When Paul gets back, we'll cycle around to how this relates to crypto too. Now, MSTR had a wonderful, amazing abandoned baby candle 2 days ago. That was on Monday, the 1st of December. Fantastic reversal, spiking down through that very, very key 78.6% Fibonacci, the purple line, and that previous swing high zone. We swung down through there.
Swang?
And swang is a word. Yeah, are you back again? How's your postman? Is he
right?
well
this
today?
Is no joke. I'm sorry to interrupt. So delivery just a minute ago. I've been waiting for a guy for 6 weeks to come around and look at my fence, and he turns it right now. Like, I'm so sorry, everybody. Please carry on.
No problem. I know what it's like. So MSTR, Paul, I was just saying that whilst you were dealing with your guys at the door, MSTR bounced down, performed this abandoned baby reversal candle. We talked about this the other day, and I said, maybe, just maybe, we'll get an abandoned baby. Very unlikely, because these hardly ever occur. And an abandoned baby is created simply by It could be on either side of the market, at the bottom or at the top. Sort of bearish move down, followed by a big gap, which we had there. That was a weekend gap, followed by a candle, which is isolated by a second gap preceding the following day. So basically, gap down, reversal candle, gap up, and off we go. We're still below the 20-period moving average and all the other moving averages. But, and I think this may align with what we were talking about in crypto and what you were saying, Paul, that there are other things that we could measure that would give us an indication about the sense, or a sense of the health of Bitcoin and crypto. And I think this is one of them, because it's such a big player in this market and there's such a lot of controversy and they have such a lot of Bitcoin. So this is all quite positive for Bitcoin, not just MSTR, which I'm long on. We got long right at the bottom on a hope and a prayer, really. And it worked. And it doesn't always work. And of course, if it hadn't, I would have had to have removed that position, hedged it, or stopped it out. Yeah. But we are at this 78.6% fib, which I've now removed. And I'm going to draw it back in for you, because I think it's a really interesting and important observation. And it's really from that move from the flat top breakout bottom part of that range. And I'm hoping that it's actually accurate. And no, it's not accurate. I've drawn it from the wrong place. I had it drawn elsewhere. I can't remember now. Was it down here? I can't remember. Yes, it was down here, right at this very low. I actually shortchanged myself. Right at that, I can't remember. Anyway, wherever I drew that from, it doesn't make sense to draw it from where I've got it now. We reached the 78.6% fib at the purple line. That's obviously inaccurate. I've got to move it either higher or lower. I think it's higher, and bounce out of there. So let me just get rid of that, because I just made a complete mess of it. So I think that's quite good. I'm long on this one, and I'm hoping that we can actually regain some really positive moves and strength in MSTR. And I hope that all this controversy is settled with their competitors, essentially.
It was only today, a private group member messaged me, sending me a link to a YouTube channel and some data points, or rather some bullet points about this very thing, about the manipulation and all of that. And I haven't quite got into it yet. I watched about half of the YouTube video. But the thing is, with all these things, right? So when I post a simple piece of news in the group, right? A lot of the sources for crypto and for trading in general, right, will be just on Twitter without a source, right? So I have to check it. I have to find a source, right? And the problem is with all the YouTube content and a lot of these manipulation points, it's like, you've got to figure out where the truth lies. And if it says these are the data points, because I had a news article the other day, completely unrelated to strategy and all of this controversy about manipulation and so forth. But I found a headline about asset movements and record-breaking things yesterday morning, but I couldn't find a source. I couldn't find it, so I couldn't post it. And I think we've got to be very, very careful about taking some of this content and not verifying. Now, I'm not saying it's not verified. I just haven't had a chance to do it yet, but I can't act on it until it is, because I'm not going to be trading based on some YouTuber's opinion, right? Ultimately, even if there's some insight there. But and also, it's like, yes, there's manipulation always, right? Is this suddenly a new scandal, which has been the new kind of manipulation, which hasn't been happening before? I don't think so, but we do have to take it into account. But it's such an interesting topic. I mean, what's your take? I mean, what is your take on this? Do you think someone is trying to chop the legs out of a strategy?
Yeah, so I think basically there's, it's the Wild West. It's a gold rush, and it's everyone's got their Winchester revolvers strapped and their long guns ready and their wagons loaded with containers to carry over the gold. That's what I think. It's not just JP Morgan. I think there are other players involved. There are dribbles of information about the Trump group and some other big players, including the Lee guy, all involved in this, all trying to grab the Bitcoin by driving the prices down, flushing out whoever they could flush out, and grabbing the Bitcoin. It's a kind of it's obviously going to happen. It's the biggest market, biggest, fastest growing market in the world, with the greatest potential. There will be, way we're moving. So,
there will be blood for sure. And I think this is if you look back, we're trying to make like, because the big thing on YouTube at the moment is like series, right? And I'm not suggesting you should be binge watching like, you know, our natural gas videos or Bitcoin Update, but I'm trying to make Bitcoin Update a little bit more of a narrative play every week for people to follow. And if you go back a few weeks, you'll see that there's one like, is fear the signal? Because ultimately that's what the market manipulators want, to create fear in order for us to exit the market, to run around like headless chickens while they coolly put their sunglasses on, sweep in, get the lower prices, and then reverse the market. And Bitcoin in itself is, if any asset is capable of just turning on its heel and being like, okay, I've lost all of these key trend lines. Okay, so this trend line was 10 years old and lost it, but I'm going to get back above it and everything's going to be fine. And it can do that. But ultimately, the question remains, how do you trade that? And the answer is always the same. You have to just trade what you see, but just be mindful of the situation and don't just exit your old positions just before things start to cascade downwards. It's a very complicated emotional experience for people, you know. So
it is. Trading is a very emotional experience, and of course, it's money. And the big manipulators, market makers, banks, hedge funds, you know, people with just whales with a lot of Bitcoin and stuff and other assets can do what they want, by and large. And you know, if they get it at the right time and the right moment in thin markets, like we've often seen, like late on a Friday as the market closes, or first thing on a Sunday night when the markets are super thin, these players come in and they start driving the market down. As soon as it gets to the bottom, they buy it all up again. And of course, we are the ones, not only you and me, because we're pretty much into our Bitcoin, but everyone else who's involved, mostly retail traders, are not equipped emotionally to deal with these sorts of swings. You and I have been doing it for long enough to understand how it works. But if you're new to the market and you don't understand these massive moves and you get trapped and you oversize and you don't know the levels, you're a sitting duck, basically, aren't you?
I mean, it's
right for the picking. Yeah.
And people need to, so like I'm in a trade now. I think it's, let me just check it. 26%. It's a hard support buy, right? The 200 MA on this particular asset, GOAT, is fast overhead, right? But this play, these hard support plays, right? These long-term support plays where there's a few assets approaching them. I switched to this strategy in uncertainty, right? If you excuse, because it's like I need to keep probabilities in my favor, and therefore my trading options become narrower to make sure that I can maintain my typical, you know, risk reward and probabilities in my favor. And the problem is people continue to trade the way they do in a bull market, in a bear market, or when there's uncertainty, and then it just wrecks them. And part of the, you know, what makes a good storm chaser, right? What makes a good sea captain? Their ability to see what's coming and then know, right, it's batten down the hatches. We can't go on deck for a little bit. And they still manage to survive the sea or see that the twister coming, right? As opposed to everyone who's just like, oh my God, there's a twister, run for your lives, right? And we in the private group are obviously trying to put our arms around people and just, you know, say, you know, it's gonna be tough trading the next couple of days, switch your strategy, do this sort of thing. And that's okay, because then if the market does reverse, because the market manipulators are trying to essentially, we just do the same thing. We're like, okay, it may reverse because of manipulation, but we're going to commit these support plays. And then if it does, we're in the money and we benefit just like the manipulators. But if we're chasing it, we're chasing green or whatever, or we're just trying to catch a knife, then of course we're going to get burnt, right? And maybe we should do as a result. So
no, for sure. Let me run through some of the plays that people are obviously watching. So, and then we'll cycle back to some of these other discussions about crypto and so on. But this is MSTR. We talked about it. This is the 4-hour chart, a different view. That's the abandoned baby on the day chart that I showed you earlier, and that's the level. Notice how we actually reclaimed that level on that 4-hour candle at the weekend with the abandoned baby candle. So not only did we claim the trend or the horizontal back again, but we performed this beautiful reversal also with this engulfing candle on the 4-hour. Looks good. Excuse me. So I'm long on MSTR. I'm hoping that these will move up. Just switching across to Bitcoin, that's moving up nicely. And I saw on the 4-hour chart, we had a bit of a bounce, bit of a little sort of mini flush bouncing back up again. And at the same time, we did see MSTR drop down a fraction, but that's looking okay. So as I said, I'm also long on Tesla, Coinbase, NVIDIA. and I'm just going to let those run. So I think we're going to get to new all-time highs across the board here. That's my feeling. Before a significant correction later, I think next year. I don't think this year. That's my feeling, but I'm open to anything. Now, before we get back to cryptos and Bitcoin, I think let's get on to natural gas. Now, this has been super tricky, and you can see all my positions here on the futures play, and it's basically all of my shorts up here at the green line. We talked about this in streams variously this week. I did a video on Monday. Go and check that one out. And I did a video on Sunday about this, so I don't want to repeat it all. Just to say, nothing has really changed. We did dip down, move down quite nicely, but only to the 20-period moving average and the channel center line on this 4-hour chart on the NatGas futures. We're trying to move back up again. I had hedged the entire position yesterday, and basically, after we started moving around a bit here, we moved up and moved down today. This last 4-hour candle actually started moving down quite dramatically, and it's poking back up again. I've now unhedged the position, so I'm still short. That hedge is no longer valid. So where could we go on this? And I think the way it's looking now, if we don't hold this double top, and I think we've just broken it, although we've fallen back down again a little bit, where could we go if we keep moving up? And remembering that I'm bullish on natural gas, but I'd like to get short for the moment in order to buy at a better price. It's too expensive for me to buy up here. And so I think we may have to retest the top of the channel. It's quite a neat channel. It's a 4-hour channel, and it's ticking along in there quite nicely. And I suppose if we get to the top, there's every hope that we could just get back down to the bottom again, and then probably further. So this is still the sort of pattern that I'm looking for on natural gas, and it'll be confirmed by a breakdown through the channel, and then probably a bounce up. There's the point of control as well. So probably aim for that level and then struggle to get through it. And so we'll probably see a bit of a retracement back up here, maybe into the channel again, back to those lows, and that swing high over here. That would make sense. So we could do something like that, back up to the channel underneath the bottom of the channel. I need to make this red, and then down. I think my target is about 375, but I think we may struggle to get through about $4 down at the bottom of these lows here. So that's the sort of plan on natural gas. And notice that's also where the 200-period moving average is here on the 4-hour chart. Let's translate that to the day chart and see how that looks. You can see how overbought it is, but you can also see we've got a potential acceleration occurring here. This is a sort of an S pattern, which can lead to an exponential move. Let's hope that doesn't happen. We tag the top of the channel. We can get some more shorts grab some more shorts up there. We've only got 30% on, maybe another 20% to bring us to 50. If we get a reversal pattern there on the 4-hour chart for a move back down to the bottom of the channel, a retest of the underneath, it could go quite deep in on the retest, and then a move down towards targets down into this sort of level at the next point of control, or in that volume zone and the 350 to 375 level. So that's the plan on natural gas. Of course, we need to see this doing something here today. It's a Wednesday. It's a good volume day. Tomorrow is a good volume day. Friday is normally a sell-off day. So, Friday afternoon on natural gas ahead of the weekends, particularly if the market's long and if everyone has, positions that they want to protect over the weekend. And so it may be that tomorrow we get there into Friday, and then Friday sees us start the move down. I don't know. Let's see how we go. With a bit of luck, we won't have to do that. We'll just move down from here.
Yeah.
So 30%, I say it's a small position, but for me, 30%, it's 0.3 leverage on my natural gas tranche or allocation. So it doesn't sound like a lot, but for me, it's quite a lot. And remember that natural gas you can make a lot of money on natural gas with a very small position. You don't need to load the boat. You don't need to FOMO in. You don't need to do anything dramatic. You can get in with the tiniest position, and you can grab the 10, 15, 20, 50% moves that occur on every single contract that we trade. There's no other instrument like it that you can guarantee yourself, almost guarantee, a 30 to 50% move every month, one way or the other. And so, you can go into those positions or those moves with a small position on natural gas. That's why everyone likes to trade it. It's a bit like trading the altcoins. It's very volatile and very unpredictable.
I need people in the group to put their hand up if they're a big natural gas fan, because I need to co-opt them into crypto, because if they love the craziness of natural gas, they're going to love some of the mid to low cap altcoin actions for sure. Different game, obviously, but yeah.
Different game, sure. But, you know, if you look at this chart, that doesn't look let's look at the day chart. You know, we get these very clear cycles and moves, not seasonal necessarily. They cycle around other factors, but not unlike, you know, we moved from $10 to $1.50 in about 12 months. Yeah. And then from $1.50 up to $5 recently, or just in the last month, we moved up from $2.90 to $5. And we grabbed all of that move. So we doubled our money on our natural gas trades. We can do that almost every month. But we only allocate a very small amount of money to it, because if it goes wrong, it can go catastrophically wrong. We don't want that. Protect your capital at all times is your mantra. Should be. Don't you think, Paul?
Yes, absolutely. Yeah. I think so. Just because I was just looking at some of the comments on the private group stream, which is just nothing but gas in my account.
Okay. Oh, yeah, I know who that is.
Yeah, I mean, the thing is, like, for people so definitely natural gas is very representative of the volatility which you see in crypto. But the reason why I say it's slightly different is, I mean, it doesn't really change necessarily the way you approach it, because you can't be precious about specific levels, because obviously when you got volatility, you're going to have all of these moves into these zones. It's not going to be quite as precise when you get volatile assets. But obviously the differences between that and crypto is you can obviously look at, I'm no expert obviously, but you can look at obviously what's going on in the world with the supply and all those kind of things, and how those things are impacted. And that's great. And then you can do that, and you factor in with the rest of the markets. But with crypto, of course, you've got also ultimately a king pulling the strings. So you've got all the volatility, but the reasons for the volatility are slightly different, right? And being able to assess that, how to trade that volatility in the crypto is slightly different play. But if you like the rhythm of it, and you like the big swings, which is ultimately, I think, why NatGas is quite popular, right? As you've just said, then, you know, trading some medium to low altcoin cap stuff can be very rewarding. I mean, look, I'm quite tempted to start trading natural gas. I really am, after watching your videos and all of these insights into it. But all I can tell you is that I know the appeal, because throughout my career as a crypto trader, there's nothing better than waking up one morning after 3 weeks of the mid to long term hold, and you've just doubled your position, right? Just in 3 weeks, and it's just fantastic, right? And you can't get enough of that.
Yeah, you know? Yeah, no, absolutely. And yeah, natural gas is capable of doing that sort of thing too. And here's the interesting part as well, that natural gas sometimes, and has actually recently, not necessarily on a longer term basis, or, you know, over days or weeks or months, but on a 15-minute chart or a 5-minute or 1 hour chart, you'll often find natural gas and Bitcoin move in tandem. When Bitcoin ticks up, so does natural gas. It's not always in tandem, and there's no real correlation. But when there are no other factors influencing the correlation between the two of them, they go in lockstep. And that's because a lot of what goes on in the AI and crypto world is now being powered by natural gas. And so it's the fuel for the money, in a sense. And so, you know, when the money starts flowing, so does the fuel. Look at what's going on right here. For those who are in this trade, we're short in the private group. And we exceeded that swing high over there. This is a 15-minute chart. You won't often see me going to a 15-minute chart on natural gas or any other instrument, but I know a lot of you look at these short-term charts. So let's see what it looks like. And you can see we steadily, we had a go at moving down. It got very choppy, volatile, thrashing about as it does at tops. This is when you see this sort of action, you should expect that the market is about to change direction. It could be an exponential move up, or it could be what I think the correct move is, down, when you see this sort of movement. And then it all settled down for quite a long time. This is a 15-minute chart. So since, you know, maybe 15 hours ago, we just steadily moved up in a very neat sort of trend line. And then we got to the top again. And then we started going berserk again. It's a bit like, I don't know, like a fly trapped in a bottle or something. You know, put the bottle over it. It's sitting there very peacefully, nothing going on. And if you put a jar or a bottle over it, it starts going ballistic,
Yeah.
crazy, because it doesn't know where it is, and its sense of direction is lost. And that's what's happening here. We don't know where we are. We've made a new multi-year high, but what are we going to do now? So this is what's going on. Everyone's in a panic, in a state, and natural gas wants to do this. It always gets mad. And so, but it's a good sign. It looks like we are trying to top here, and on a very small scale compared to this much larger topping pattern on this 15-minute chart. So yeah, very crypto-ish in the way it trades. It's super interesting. I know a few people in the private group only trade crypto and natural gas, and they trade them well because they trade similar characteristics or personalities. Yeah.
So
maybe
then we should I don't know, maybe we should remarket your NatGas as a stepping stone to crypto. So do you want to get into crypto? Check this NatGas out, and just wean them maybe towards that. I don't know, but because I'm going that way for sure. I just wanted to mention just something about Nvidia. I don't know what your take is on this. Just a bit of a going back because obviously. So there's obviously quite significant memory shortages at the moment, which power obviously all graphics chips of all kinds, but including the AI ones. Oh, we've got another new member. That's great. Mumi Chang, great to see you. Now, I think memory shortage can boost NVIDIA's demand and pricing power in the AI chips, of course, but it also risks limiting production volumes in the long term. So I'm not sure that the current memory shortages are offsetting too much of the AI bubble narrative. I mean, what's your thoughts on that? Because you said obviously you're long on the NASDAQ earlier. Any thoughts about the whole bubble thing?
Yeah, so obviously NVIDIA's in a bit of a bubble. I mean, it's a very extended bubble. If we look at the weekly chart, and bearing in mind, I think this is a log scale. Maybe it's not. Let's make this a log scale. So, this is what it looks like. So we've had two pullbacks. So we're obviously due a third. When will that occur? And where will it get to? Probably the 200-day moving average. That's this purple line at the bottom. 200-week moving average, rather. Purple line at the bottom here. At some point. And that would make sense. And that would be down all the way down below 100. And I did say this on stream on Sunday, I think. I think I said, no, I was talking about MSTR. I said MSTR could get down below 100 if a similar sort of thing happens, and that we break down through this current support. Let me just show you down there at around 100, the second purple line. And, it's in danger of doing that. And if it does that, NVIDIA's in danger of doing something similar, dropping down towards its $100 level too. So let's see where we are. We're at 180. Could we drop down to 150 very easily? The previous all-time high, triple or double top, and that little baby triangle breakout, which I'm obsessed with. I think we're going to come back there, and also the 200-day moving average. But for now, I think this will go with the rest of the market, and I think the rest of the market remains bullish. And even if there are supply and demand relationship strains or changes, variations in that relationship, I think NVIDIA will just chug along until something catastrophic happens. Now, it's one of those international plays as well. The US government's involved, the Chinese government, Taiwan, politics, money, war, everything's involved in this. And of course, war. NVIDIA's not the most peaceful chip maker, I have to tell you.
No.
I don't know if you're aware of what they make apart from things for toys and drones and computers. But it's I've
been buying NVIDIA stuff since I was building PCs, since I was like a kid, and and I've been through many memory price increases. The pandemic was an example, but this one is pretty insane, right? It's pretty much doubled in just like 3 or so months. And you think about the whole AI sphere. Now, obviously, a company like NVIDIA, they can shake that off, right? It may be inhibiting their plans. It may be helping them in the short term. But in terms of competitors, now we have an issue, of course, where, with all the tariffs and all that kind of stuff, and the rejection, as you said, the US government is involved in everything with chip manufacturing, which, of course, the powerhouse is Asia for that. And there is a risk, that these sort of situations can lead to competitors in the space getting a leg up. when they have a better supply chain for all of these sort of things and access to more variety of things with less restrictions. So it's difficult to say which way it's going to go. Obviously, NVIDIA, I think, can absorb it, but in terms of a correction and the bubble narrative, it certainly doesn't help things, because it's essentially just a pipe being clogged in the machine. And that's the worry. I mean, the whole bubble thing, I have very strong opinions about AI and the technology ethically, and the way it's been handled in terms of the way it's been pivoted. I don't think it is I think it's extremely nefarious on many levels. And that doesn't necessarily mean that has anything to do with the bubble, because we're dealing with companies which nothing's going to stop them, right? But it is the obstacles which it may face are perhaps entities like the European Union, who are like, nah, I'm not liking the direction this is going, and then it starts to fight back. And we've seen the trouble that it can have for big companies like Apple and so forth in terms of the service sector. So it is going to be, there is a powder keg of sorts appearing on the horizon. I think we just bear in mind these factors, but keep your eye on the memory prices, because they indirectly do have a correlation, of course, to the success of this market if you're trading it. So just caution here, potentially.
Yeah, no, for sure. And from a technical perspective, it's very, very simple. You can see my two long positions. We're below them, both of them actually. It's okay. But we have a black line across the page here. Let me just quickly make this thicker and more prominent and make it a different color. I'll make it purple. Purple lines are the most important on my chart. So if you see a purple line, you should pay attention to it. And that line skims all of those tops going back to August this year on the day chart. August this year, yes. All those tops from August all the way along here. Then it became a bottom, then it became a top, then it became a bottom, and now it's above us again. And we failed there yesterday, even though we gapped up and we pushed up into there very strongly. It looked a bit like a price magnet move to me, rather than one with conviction. So a price magnet move is just sort of a technical move attracted towards a level. For example, that purple line and the 2050 confluence here. Pushed up to it because it was there, that's all, without conviction, not a lot of volume. And then today we just came back down again. In fact, within the day yesterday, we did close this little gap a little bit. I suppose that maybe that was important, although it was closed a little bit yesterday. But we really got a hold here, and we've got a lot of traffic. We're now below the 100 period. That's this gray line that we've just slipped below today, and the 20 and the 50 and the purple flat top line that we've only been above, not for too long really, only since October, and we're back below it now and struggling to get back above there. So I think this all indicates what you were saying, Paul. There are headwinds, but a rising tide is, I hate trading cliches, but I'm going to use one anyway. In fact, I'm not even going to complete the sentence.
Complete it. It's YouTube.
Rising tide lifts all ships, or raises all ships, or something like that.
Or washes them away. I can't remember.
Or washes them away, yeah. So that's what I think on stocks. I'm long across the board, including these 4 names at the bottom. And if you're in the private group, you'll know the entry prices and the levels that we got in at, and you're all au fait with that. I want to go across quickly, have a look at our currency plays, and there are only two that I've got on, but they're based on this movement on the dollar. Dollar's moved down. We want this to move down, rejecting the 200 period once, trying to reject it for days, on a whole week actually. We stayed above it and we came back down below it again, and we're now moving down. We've just broken down through the 50, which is good news, and that tweezer bottom followed up by another spike low 2-3 days ago. So a key level on the dollar there, and we should see a little bit further movement down. I think we get another 2 or 3% down on the dollar, which would be really good for most assets. We could get a lot more down on the dollar. For those who think the dollar's doomed, Paul, I don't think you hold that view, as I don't either. And we're not playing dollar weakness as a theme. I'm not, anyway. Maybe you are, Paul, or others might be, but I'm not. I think the dollar, amongst its group of peers in the fiat collection, is likely to remain the strongest. And that's it. And so that's my play. I'm actually a dollar bull overall. But I think, like other things like natural gas and gold, we've got to have a bit of a pullback. I will be getting long on the dollar.
I was talking about this briefly yesterday, and how a possible scenario for Bitcoin being able to outpace gold whilst also being in a bear market versus USD would be obviously a strengthening dollar being one potential factor. And obviously, I think the dollar has had a severe beating and it deserves to be let out to play for a little bit. And I think that's probably looking at the monetary policy we're moving in, if you ignore Japan, then I think we're right on that for sure. Interesting how that's going to factor into crypto. If we there's a lot of things we're trying to make sense of at the moment. So, will the altcoins look primed in terms of TA to have their run right now? I don't know when that's going to start, but how does that factor in when the dollar is becoming a little bit more hot again? So there's so many more factors at the moment, and I hope if you haven't checked out Bitcoin update from yesterday, please do so. I'll be keen to have your opinion on it, but it is an opinion piece, right? It is an exploratory piece about trying to put all these things together, because I do not think in any market.
Excellent video. Yeah.
What was your idea, mate? It was your idea.
Yeah, but that's why it's excellent. Yeah.
Well, from now on, James, you're in charge of Bitcoin update. But I think that the thing is,
don't put that on me. Yeah.
It's not. It's we're dealing with a very complex set of variables at the moment on the back of 2025. A very complex, and I don't think it's ever going to be as simple as Bitcoin's going to have a bear year, altcoins are going to run, blah blah blah. I'm not sure, right? And this is the thing, and because when we're in uncharted territories, right? It's like price discovery for an asset, right? We don't know where it's going to stop. We don't know what it's going to do, right? And these are the things we have to. And I think the whole market, the whole technology base, the whole sphere of modern trading and modern assets, with the tech leading the sector as example, all of that is completely new territory. And the AI stuff obviously is part of that, and that ties into natural gas. It ties into everything. So I think the reason why you're seeing a lot of different opinions and some crazy opinions, right, is because we're in crazy times and the future of money is being rewritten as we speak. So what we've been trading the last 25 years, not me, obviously, I'm way too young, but 25 years that's the old order. And whatever the dollar looks like.
How old are you, Paul?
I'm 45.
Impressive. You made it.
It's just
you made it quite a long way.
It's just not 4K. That's it.
Yeah. Okay. I'm almost 60. I'll be 60 on the 6th of January, just for those who are in the group who want to buy me a present. 6th of January.
Let me make a note of that. Make a note of that.
Yeah. And I'll be 60 years old, which is very, very, very old. And I don't recommend it to anyone. If you can bow out early, it's a good idea.
Oh, okay. Thanks for letting me know. I'll avoid 60.
Yeah. Anyway, but talking about birthdays and gifts, I hope you do. Someone buys me something. No one ever does, but maybe this will be my lucky year. At 60, I think maybe I'll get something.
You definitely deserve some present on 60.
I think so. So this is copper, Paul. We're talking about crypto plays and things that go along with this bullish idea that I've got, apart from Bitcoin doing very well against gold, as we can see from this chart. I'm going to come back to copper. This is Bitcoin against gold. That's a reversal, if you've ever seen one, making a fractionally lower low and bouncing out with a big engulfing candle breaking above the 20 period. That's what we wanted to see. If we didn't see that, I'd be incredibly worried about Bitcoin. This, for me, was the last chance to bounce out of here at around 20 ounces of gold per Bitcoin. Anyway, that looks quite good. But I wanted to point out this copper chart. And as you might know, I'm short on copper at these two red arrows and fully hedged at the orange arrow, basically locking in almost no gain and no loss. You might ask, why did I hedge it, not just close the trade and wait for the next trade? That's not how I trade. I like hedging. I hedge my bets all the time. And so if it's not going in my favor, and I think that the market overall could be bullish, copper is called Dr. Copper for a reason. And that is when copper is healthy, very often the equities markets are healthy. And even beyond that, when copper is healthy, you would expect other more specific markets related to the demand on copper to be in a positive and healthy state. And that would be things that demand electricity, like Bitcoin and AI centers. So all of these stories are tied up together, and copper surging up, even though we're hedged. I will try and adjust this hedge, either take profit on the longs when we get up there and go short, maybe at the top, or add some longs today and ride the hedge up with it along with the extra longs, something like that. But I think we are moving up on copper. I don't know how far, maybe only back up to the top again, but it could go higher. And that's all good news for the markets in general. And whilst copper is moving up so vigorously, gold is not. Gold, I'm short on. And I'm short from over there and a bigger position here at the 78.6% last chance Fibonacci. And I'm short on gold. But because of that short, and gold is in an uptrend, I'm only shorting it to come back down to this level. And that's at the extreme. I think we get there, we'll be lucky, but maybe just to the red trend line down to there somewhere. Yeah. And then I'll be getting long on gold again. But I want to ride it down. And it's a counter trend trade, so it's risky. Because of that, I had to hedge that short on gold with a long on silver simultaneously. So at the same time I got short on gold, I got long on silver at $50. And I got out of my longs on silver close to $60, 59.20, I think it was. And so we took a massive profit on silver whilst holding our shorts on gold, which have barely moved. And now this is the 10th time that we've done this. We've made big profits on silver on the long side and made profits on gold on the short side simultaneously. And I think that's incredibly elegant and very, very clever, even if I say so myself. And we've done it 10 times and every time has worked out. The 11th time probably won't. So
yeah. Once you see a pattern.
Yeah. So bullish on copper, even though I'm fully hedged. I'll find a way to get long at some point, which is very good news for the equities markets and crypto and natural gas. And that means natural gas might also get a bid along with the same theme, and maybe just back to the top of the channel. So all of these things are playing together in a most beautiful symphony, if you want. And every instrument has its role, and they're all playing slightly discordantly, perhaps at the moment. But I think they're all coming to syncopation, I think is the word, or is that for dance? You would know, Paul.
Well, syncopation is essentially where you're conflicting rhythms, but they work together in harmony, right? So like Latin American music. Well, so I'll be like tapping 3 with one hand and 2 with the other. That's syncopation. Right.
Okay.
But I know what you're saying, and there's definitely a few violins which need tuning, but hopefully we'll get there.
Yeah. All right. And I think that could lead us into crypto and Bitcoin. I think we've covered almost everything. We haven't covered softs and grains, and there's not a lot to talk about here. I'm short on coffee, and that's about it, really. And long on lithium. Lithium is a good play. Once again, in the same playing field as crypto, energy, copper, natural gas. It's all the same story. And so I want to be long on lithium because it's being used all the time, even though I have a moral issue with some of these metals that are mined in parts of the world very close to where I live. And I don't like it very much. But I will buy it. So, and I shouldn't, but I have. So also long on sugar. And sugar plays along with the energy plays as well. Once again, it's interesting. So when oil becomes expensive, sugar will often be, and you might know this from living in Latin America, Paul, that a lot of ethanol is used in gasoline mixtures for cars. And so when petroleum gets expensive because of oil prices, a lot of people switch into sugar, ethanol, and benzene. I think they call it benzene. In parts of the Arab world, they put other stuff into petrol as well. But sugar fuels some of gasoline, believe it or not.
Well, I mean,
and so sugar price is ticking up.
The one thing you don't have to worry about in the part of South America, I mean, Uruguay and Venezuela, where I've lived, the one thing you don't have to worry about in Venezuela is fuel prices. I mean, when I first arrived, it was essentially free, right? And then when I left, it was essentially just a little bit higher than free. It's insane. Okay. So they don't have a problem with that. But you're right in the other areas of the world, for sure. I mean, it's quite an interesting. There's in the UK at the moment, they're changing the tax system for roads for electric vehicles, and I haven't quite got my head around it yet. Because again, it's kind of not promoting necessarily, it's not promoting electric vehicles and so forth to get off petrol, but it's kind of just leveling the playing field a little bit, which takes away the sheen and the advantage you have of having electric vehicle. But look, the whole fossil fuel thing, I mean, like, we won't be talking about it in 50 years because we'll have run out. So, enjoy it while you can.
Yeah, exactly. No, it's dirty and filthy and smelly as well. Let's, Paul, I'm going to lead into Bitcoin very briefly with this assessment. You've been doing a lot of videos on it, so I think we've covered a lot, and we're talking a lot in the private group about this, but I would like to leave you with this channel. I think you have a similar channel. I may have stolen this one from you, like you stole my Bitcoin gold chart, so thank you very much. And you're welcome, James, you should be saying. So here we go. We've got a channel. We reached the bottom of the channel. It's also the 78.6% Fibonacci level, and we bounced out of it. That's all I can say. I'm long on Bitcoin. I've been hedging furiously my leverage positions. Most of my Bitcoin is not leveraged at all. I've got Bitcoin, Ethereum, XRP, all unleveraged in a wallet. But I'm talking about trading, risky trading on Bitcoin, which I only do with money that I can afford to lose, and I expect to lose it sometimes. And so that's the caveat, right? I'm long on Bitcoin. You can see my 3 positions, and these are not been static positions. I've been hedging and unhedging for about 2 weeks now. Every time, so basically, instead of using a stop loss, I hedge my position. So if I'm long, 1 Bitcoin, and it moves against me, breaks my line in the sand, and I need to get out or protect my position, I'll just, if I'm long one Bitcoin, I'll sell 1 Bitcoin at the same time on the same account, or a different account. If you can't do that, you could do it with different brokers if you're in the US, for example. And then I'm now in a position where I've locked in a loss. I've got 1 Bitcoin long at a loss and 1 Bitcoin short, which will become, as that moves down, the short will gain profits, and the loss on the long will get worse. And so at some point, when the market starts moving up again, I've got to unhedge and get long again, because otherwise I'll be trapped at the bottom with all my losses. Yeah. And so I have to start unhedging, and the timing is incredibly difficult. So you unhedge with the hope that the market will not come back down again, but if it does, you have to rehedge. And so I think I've taken over 700 trades in the last 2 weeks. Hedging trades, not making money, not taking profits, not doing anything good, just protecting my capital, which to me is the most vital and critical part of all of this. And no matter what happens,
for sure,
I protect my capital. I protect my capital, because once it's gone, it's gone, and then you're going to have to scramble to get some more and get back into the market. That's all I want to say on this, but I do want to point out some really interesting levels. I drew this Fibonacci study in from the bottom to the top. And remember that the market is now retracing back into these Fibonacci levels. And these are just really determined by mathematics, not what, nothing on the chart particularly. I've just drawn a line from the bottom to the top and put the levels in based on the Fibonacci ratios, the Fibonacci mathematics. And look how the markets reacted to them on the way down and on the way up. So here we got up to, and it's the wrong way around, because we're moving up against the, it's opposite, if you understand what I mean. We got up to the first fib, paused, got to the next one, and these were not valid numbers or relevant numbers at the time. They were, this is in hindsight that we've drawn this in. Paused there, got through that one, and the next one, and you can see how we reacted to the 50, to the 618, there again, there again, there again, there again, and on the way down, reacting to each one of these staircases on the Fibonacci study. And so those are the key levels, and the market has respected the Fibonacci levels, and it's traded off them, and I expect it will continue to do so. On this move up today, we got to the first fib level precisely. No, I wouldn't say precisely, within a few pennies, and rejected from there. That's where we are today, and it's exactly the same level that we've been trading off for all this time, going back to the beginning of the year in April. So just a very interesting observation. I'm going to be using these fib levels as my addition, hedging, unhedging, my action points. So if I need to adjust my trade, I will do it at these hedge levels and probably not in between. That's all I'm going to say.
No, that's good. And I think, look, this actually, we were talking about this earlier. So when you got two people talking about the same asset and coming at it from different angles, it's like, I think, like, so some people could very easily be like, well, do I listen to James? Do I listen to Paul? I'm like, we're not really in conflict, because I will post charts which I do not think is a viable thing, right? Like a bearish predictive, right? But I will post it because it's important we all visualize different scenarios and plays to properly orientate and calibrate ourselves to the market. So the advantage of both of us talking about Bitcoin is the fact that we get better perspectives for each other and for the community, and then people can act based on their own trading strategy, because ultimately no one should be trading exactly the same way as James you do, or trading exactly the same way as I do, because we're human beings, and the way we approach the market and the strategies we feel comfortable with based on our schedule or whatever, right, is going to be different. So, you know, we are trying to provide a well-rounded coverage for all of these assets, whilst at the same time, you know, using any disparities to spark great conversations, like Bitcoin Update yesterday, which was just a thought experiment of sorts about the possibilities, which is essentially combining, you know, what people may look on the surface as two opposing views, right? But it's not like that. And if I switch to my Bitcoin chart for a moment, if that's okay. So, like, James, the chart you've just shown, super relevant, super important. But now let's zoom in and let's have a look at exactly, because you're talking about, like, what signals do we need to see in order to feel like I don't have to start, I can take the boards off the windows now, I can calm down and spend less time managing it and just commit to a position. And, you know, this is why the multiple perspectives come in. So this is the 4-hour chart. This is a bit more of a macro. And what I have been looking at is, I mean, sometimes I'll be posting different perspectives throughout the week because we're trying to make sense of something, but then sometimes it'll just be the same chart for 5 days in a row because it's the only relevant thing. So we've been in this downtrend, we've had a lower low, we've had a lower high, which hasn't managed to surpass this swing high, but now, as I was saying at the start of the week, we need a higher low, and we've got that, which is the first sign of a trend change, which should probably make you sweat less, James, right? And then we now
I'm very pleased we've got a higher low, and a higher high.
Yes,
and a fractionally higher high.
And that's the thing, is that, and context is everything, because it's a fractionally higher high, but it's nonetheless a higher high. So I was saying this morning in one of the little members only videos, no, so it's a private group exclusive. So join the private group. If we get another move up from here, maybe to tap 96, because on this chart, it doesn't actually show the 96 to 98K range as being quite significant, but it is. And if we go up further from here, really slam dunking and underscoring that higher high, then guess what? 89K, which is a higher time frame, very important level with, say, for example, the 3-day 200 MA, this becomes the first kind of idea we have to enter a long play, right? And the signals start stacking up. People start entering the market, and then we start having the churn, and things turn around a little bit. And this is what we're seeing. It's always the same case. All of the good trading we had a couple of 6 to 8 weeks ago was just like, we're just waiting. And then once the bullish signals start stacking up, and then we compare that to the longer time frame setups and the larger patterns like you've been showing, we put all those things together, and we're starting to see opportunities to come in on. But, like, still there's hesitation, because I'm not coming in at 89K with a Bitcoin play from this area. I'm not, because it's probably just going to come down even further, right? But if we get a stronger move up, even above 96 and tap 98K, it's showing a little bit more momentum. Volume is increasing slowly, and then this retrace value gives us a lovely entrance on multiple timeframes on the 89K level, which has been a significant level for candle body closes on different charts and so forth. And so that's the whole game. Get the perspective, look at what's happening, wait for your signals, and then enter. Not because Bitcoin won't just do this, but it's got less chance of doing this if the bullish signals stack up, because you'll have other buyers coming in and more sellers walking away on the back of these basic trend dynamic signals we're getting. And this is just the way it goes, and this is the way we're doing it. So, I mean, and it works quite well, to be honest, because it's a probabilities game ultimately.
Yeah. There were some questions, Paul, about Sol and ETH. Don't know if you want to check that out.
Yeah, I'll get into all of this in more detail from Friday. But this is Ethereum 3-day. And just to clarify where we are Ethereum, I haven't done a big look at Ethereum this week yet, but we are in the middle of this big pattern ultimately, and nice place to come in on ultimately. If we can form a reversal pattern here and get a little bit of retrace, and this is essentially 2,800, right? This is looking good. This is looking good, and it's manageable, of course, because we have lower areas as well, which are clearly defined, meaning it's something we can properly look at as a trade, and we can assess risk. So, Ethereum's good, and again, it's very similar to what we're just looking at on your Bitcoin chart. Ultimately, the trend is broken. We're just trying to find our feet. Ask yourself, what do you need to see for your trading strategy? This is obviously the 3-day. Let's zoom in to the 4-hour. Yeah, there you go. So there's people coming in with an order block. They're just looking to come in and with a reversal pattern of some sort and then take it away. So now this sort of area is the first kind of line in the sand we've got probabilities we've got in our favor for Ethereum, and it's working out quite nicely, but we've just got to wait for that pullback. As for Solana, a little bit more clear-cut trade here. This is Solana USDT 4-hour. Just zoom out. We're in this big pattern. We'll just move back to the daily, but there is a good play here right now. This is where we are, right at support here. And you can see we're trying to form a reversal pattern, which is great, which is what we want. And then if we just move back to the 4-hour with Solana, we have a very defined neckline for a trading opportunity, right? And plus support below. And this is a higher low. So we just wait for a breakout. And I'm not suggesting that you would then chase it, but once you get that breakout, it is confirming that this downtrend is most likely coming to an end. And then we just look for opportunities to enter. Some will look to enter on the neckline. Others, if they feel the market is still a bit shaky, may just wait maybe for a move back down to this fib level at 0.5 and then enter. But the point is, once we see this signal, like with Bitcoin, more people will look to enter because they're already entering. They're forming this pattern, right? And then we trade off it. But if you're just coming into Solana here, like, oh, I want to come in here, it's probably done, right? That's not the right idea. So
that's
Solana,
the top of the W pattern too. If that over there, Solana was the biggest mover amongst the majors yesterday.
Yeah, it's doing really well. Yeah, it's doing really well, and that's because again, the beauty, the double-edged sword of crypto is that there's so many tokens, right? But I will err towards higher cap trades when the market is uncertain because they could absorb more of the bearish narrative and they're less extreme. I won't be trading a low cap right now. No, because they're the last to recover and the first to crash. So Solana is an example. This will probably be an altcoin gems at the end of the week. This is a great opportunity, really classic textbook sort of trading thing. And I'm not suggesting, of course, you might decide to just ride the hard breakout, right? You might just come in right here as close as you can once you see a candle body close. Other people will be looking for the retest. Other people, like me, maybe a deeper retest. But I won't be looking to enter until I've seen that move. And it's always about a confirmation game, really. And then once the signals stack up, because you don't want to be out there by yourself, right? You want to be there with other people, with other buyers. Otherwise, you're screwed. But Solana, MD, Solana's looking pretty good. Really straightforward, classic setup for that. And we'll get into some more of the setups on Friday. And that's the tease.
Can I show you my Solana chart?
Yeah, please.
Can I quickly switch over?
Yeah.
So, so Ethereum. So I rebought some of these this week as well. Two little trend lines. This is not massive trend lines, not significant. Little trend line we broke out of, and the 20 period on Ethereum. Got another little trend line above us, but the major cluster up here and that swing high. 3 moving averages plus the horizontal line. That's going to be tough, and another trend line coming down from the top. So don't try and buy over there, as Paul just said. That's not the right place to be buying Ethereum for sure. If you're going to buy it, it's got to be here or lower, I think. And then Solana had the biggest move yesterday amongst the majors. I don't know if you call them the majors. I do. The crypto majors. Do you call them majors and minors, Paul?
No, but it fits. It fits. It makes sense. Yeah.
If it fits, yeah. So that move yesterday was massive. And it's a big engulfing candle. And it also closed above the 20-period moving average. Here's another point about the 20 MA on Bitcoin. I don't know if you spotted this one, Paul, too. We have not closed above the 20 MA SMA on Bitcoin, apart from a couple of days in October. since the sell-off, since the flush, the start of the flush over here in October, 9th, 10th of October. We've only now, yesterday, reclaimed it since then, apart from that one brief period with the tweezers top. Pretty important. And I'm going to just do one more thing before we finish off. And for those who say this last sell-off wasn't all that dramatic, we've had much worse before, it's pretty bad. You look at it on this chart, even though it's a regular chart, by the way, not a log chart. On the log chart, it looks like nothing. And of course, you know, it doesn't look too bad. But on a regular chart, although adjusted logarithmically, it's not as serious as some of these other massive crashes further behind us. But in real money, it's massive. 126,000 down to 80,000 with a $2 trillion or $3 trillion market cap. That is absolutely ginormous compared to all this stuff when the market cap was a few billion. This is massive. And so if you survive this, and if the market survives this, which it will, and we manage to carve out a bottom at some point, and you know, don't lose our capital. And I've been struggling with my leverage positions, protecting my capital. That's been my only task for 2 weeks. Not get liquidated. And most of my crypto is not held in leveraged positions, by the way. I'm not that irresponsible. Most of it's in cold, hard storage away from the world. And away from trading. Away from trading, very importantly. And on that last bull run that we had that petered out, this last recent bull run up into where we topped, I managed to take some more of my crypto out of my trading account, take the profits and put that into cold storage. Not because it's particularly safer. It is safer, obviously, much safer, but that's not the reason. I've taken it out of my trading hands and put it into my banking hands, and it's safe there. And it's not easy to get it out of that wallet back into the trading account without a lot of costs and time and effort and phone calls and so on. And so I've left it there and it's safe. I would advise to all crypto traders, if you are an investor in crypto of any sort, probably Bitcoin, don't keep all of it in your trading account. Stash some of it into a place where it's difficult to get hold of and it's not easy to get out and to trade, and to particularly to trade at leverage. All of this stuff that happened here was leveraged, most of it, leveraged traders, billions and billions, tens and tens, maybe hundreds, probably hundreds of billions of dollars of money from people like you and me. Don't let it happen to you.
No, I mean, it's about management as well. I mean, you don't want to have anything on any one given exchange. You know, they could just, they could just disappear overnight. Or have, whatever. So, I mean, the way I simply, whatever I'm actively using, right? So obviously like a futures account, I'm always using it. So it stays on the exchange, right? Spot positions, long-term positions, which are in loss or require management in terms of, I can just keep trading them downwards and trading little 10% and increasing them. That'll be on the exchange. But things which are locked in are just, either too out of reach or are in perfect positions and are way down low and they're not going to, then they're on cold storage. Right. And that's the way it needs to be. And you should never be on any one given exchange either. So you have to very much diversify for sure. Paul,
this is one that you brought up very beautifully yesterday for our members only. So if you were remembering, you saw this, you should have paid attention. This is the Link token coin. And it's a beautiful pattern. It's absolutely beautiful. We've got a rising long-term trend line, which we did tag double bottom below it. That's okay. It's actually bullish because we tried twice and didn't hold down there. We broke the trend line, the short-term trend line, and the 20 period. We also broke through this flat bottom, flat top green line all at the same time and moved up. We've got a lot of traffic above us, another trend line and all the moving averages, but it looks pretty good. And I'm long on Link too. And I added some more based on your advice the other day, Paul. Thank you very much. And I hope some of the members did too. I think this is looking positive.
I've lost my link chart. I can't even find it now.
Oh
yeah, there it is.
Amongst your tabs. We could have a look if you want. Check that up. We can finish off with that, I think. We're a bit over time.
I don't think I can find the right one. I've been messing with it. But no, it was a good setup. It's confirmed double bottom.
Beautiful.
So yeah, it's really nice.
And target would be just up to the trend line to start with, right?
Yeah, I mean, look, Yeah, and this is the thing about risk management, right? People think risk management's all about stop losses and hedging. It's not. It's like part of risk management is like knowing when to get out, and when the market is hesitant and there's uncertainty, it's TP1 every time, right, or close to it, right? And just I'm in a trade right now, and I mean I'm watching it very closely, and I really want it to break above a key moving average, which is getting squeezed by. This is GOAT perpetual, but if Bitcoin isn't giving me anything, I'll just take my standard 30% and just get out, because I mean you don't lose, right? You don't lose that way. And if you can make money when the market is the way it is at the moment, then it's a blessing. So that's definitely, take profits is something which there's going to be a masterclass video on take profits, which we're going to release in the group as well. But it is the unsung hero of protecting your capital, right? Or rather protecting your profit, right? In volatile markets.
Absolutely. For sure. I think we should finish there, Paul. I've got nothing to add further. Just to say that I will be live on Sunday. Paul, you'll be live Friday, I think.
Yes. No, Thursday. We've moved
Thursday.
it. So Thursday.
Oh, yeah. Thursday.
Thursday, the death slot is going to be crypto, and then we've moved Altcoin Gems, which contain the link setup, as the headliner, as the hero coin on Friday. And 6 GSF. Which trade is that, Paul? If you're asking about what I was referring to, it was GOAT. It was GOAT perpetual, and I got in at 0.03550, and I'm just umming and ahhing about whether to take it if it hits the 200 MA. So that was the trade, just to clarify. I think it's 2x leverage. But yeah, I think we've overrun, so we'll save the rest of the crypto conversation for.
I bought another coin yesterday, Paul. The day before, Monday. Bob. Build on Bitcoin.
Bob.
Build on Bitcoin.
I'll build on.
Like Hob Bob. Check that out.
I will build on. Okay, that's what a great name.
Build on Bitcoin. Anyway, that's all from me, everyone. Paul, thank you very much for your wonderful views on crypto and all that sort of thing, which we cannot do without because we're not experts ourselves, but you are.
Try to be.
And it's always good to have you as part of our team, of course.
Oh, no, it's great to be here.
Have you got anything else you'd want to chat about or remind folks of coming up during the week?
Well, you've got a tech video coming out tomorrow, right?
Yes.
You've got a tech video coming out tomorrow, and then we've got the live stream. We are adding a lot more members content at the moment, and we're probably going to clarify that to people at the moment. But we're trying to get as much content as we can to people in various different tiers, as well as the private group to support everything. Let's have a look. We've got another question. Could you have Paul's trades added to the trade alerts, please? Yeah, we'll consider that. I mean, maybe I'll get into discussing that concept on Thursday's live stream, because I knew that would come up
at some point.
And we'll have that. So hang around, and I'll try and talk about that. I'll put a note on, and we'll talk about that on tomorrow's live stream, because it's an interesting conversation, and there's a reason why we do things a certain way in crypto. But yeah, okay, let's say goodbye.
All right. Okay, folks. Have a great Wednesday. It's hump day. So if you got through, actually, today is nothing. If you got through the last couple of weeks on crypto and you're still here, and you obviously still are because you're watching, well done. Good on you. And you got through everything. Hump day is nothing. We'll get through this day like a breeze. So enjoy the rest of hump day, and we'll see you in the next stream. And then was there, I think, I can't remember now. Was there something else that we had to remind folks of? I think I wrote something down. Maybe not.
There's always so much.
There is always. Yeah. No, nothing. Sorry, I've forgotten whatever it was.
Well, just okay, folks. Check out Bitcoin Update. Like, comment. It's a very interesting video for sure. Me and James both worked on it together. We've obviously got you had NatGAS video, which came out on Monday, right? Which is I think still pretty relevant. So yeah, stick around. We're improving the content. We're getting more of it. So yeah, thanks for joining us, everybody. And I guess I'll see some of you tomorrow.
Yep. All right.